Good morning, Sabah al Khair. It's good to be back in the region. We're going to talk about banking, obviously, and we've heard a lot of talk about these new technologies. Mr. Al-Wari, do you know the oldest bank in the Middle East? I'm not going to ask you specifically to stand up again. It's National Bank of Egypt, of course, founded in 1898. But when we look at the history of banking industry has often been the first industry to use new technologies. The very first mainframe computer was built for a bank in 1953 called ERMA, Electronic Recording Machine for Accounting. And so this was the first bank mainframe built by SRI, the Stanford Research Institute, the same guys who built Siri back in 1953 for Bank of America. But today, you have more computing power on your smartphone than Bank of America had in 1985, right? So having this technology infused into the world has changed our behavior. You know, we do stuff like this. We have this weird behavior where we do the selfies and, play Candy Crush on our phone and things like that. As individuals, we've responded to these new technologies, starting with computers and now with smartphones, where we camp outside of Apple stores to get the latest device. The big news today, of course, is Samsung's launching this foldable smartphone. Did you see this? The Galaxy Fold. So this is obviously going to be the next big thing, a phone that turns into a tablet. Pretty cool. But when you look at this technology, there's a yin and a yang. Historically, as technologies come into society, we love this tech, but it has a negative side effect. It has impact. In 1812, the textile workers who were put out of jobs because of the steam machine revolted. They came in and they started smashing up the factory, smashing up the steam machine. Even some factory owners were killed. Now, we call today someone who doesn't like technology a Luddite because the leader of this group in England in 1812 was apparently called Ned Ludd, the leader. We call them Luddites, someone who doesn't like technology. But it wasn't they didn't like technology. They didn't like technology that was taking their jobs. And, we start talking about artificial intelligence and how that's going to impact jobs in banking. I'm starting to worry that Sofia is going to take my job as a speaker, right? So no one is safe. And then 200 years later, you have taxi drivers in France stopping Uber drivers, pulling them out of their car and smashing up their car because Uber was taking their jobs. Now, we can track this change historically. We can see how technology disrupts industries. So this is how mechanized farming equipment, or the combustion engine, affected farming employment. In the United States in the 1850s, 70% of the US labor force was in agriculture. Today it's 1.6%. So all those jobs, what happened? Did they disappear? Things changed. People moved out of farming and they moved into the production line, the Model T Ford production line. And then today, we've automated the production line with Tesla. And Tesla's saying by end of this year, they'll be at a run rate of 500,000 vehicles annually, more than 10,000 vehicles a week. Pretty impressive stuff that can be done with automation. Elon Musk, the CEO of Tesla, actually chairman now, he's got the change there. He said, the reason we don't have humans on the factory floor is we'd have to slow it down to human speed. Really interesting insight in terms of design. But banking is a very traditional industry. So when you look at banking, you think, even the word bank comes from the word banco, the marble benches they used to have in the Italian marketplaces where people would sit and do the money changing. This is the oldest bank in the world, Monte dei Paschi di Siena. And not much has changed in that 700 years since this bank came to be. Even the products that we have started many, many years ago. Then, in the 1950s and 60s, we started working on computing, ways to update the technology, to automate banking. the first bank mainframes. And this is where we got bank account numbers, because the computers back there weren't sophisticated enough to sort customer records by their name, because we used to have the card in the branch with your name and address. We needed to give each customer a number. That's the first use of bank account numbers. Then Bank 2.0 era was the introduction of self-service banking, where we realized that the opening hours of a branch were a restriction in terms of operation. So we tried to extend the bank utility and the function of the bank beyond that, starting with telephone banking, and then ATM machines, automated teller machines built to copy what a teller did in the branch, and then finally internet banking in the mid-90s. But when Bank 3.0 came along, with the introduction of the smartphone, we started to see new design parameters. How would you bank on the move? How would we design a bank optimized for this mobile experience as you're moving throughout the world? And this created, for the first time, a thinking that it was no longer about adapting the branch model to the mobile phone. We had to start thinking about design differently. Like this, Yuibao, the most successful savings product in the world today. It's linked to Alibaba, one of the mobile wallets Mr. Al-Wari was talking about in the opening session. Last year, China did $22 trillion in mobile payments. That's more than all of the plastic card payments in the world. Mobile is officially now the #1 consumer payment, but this was out of China. But Jack Ma and the team at Alibaba and Alipay, Ant Financial, recognized behaviors had changed. So they enabled people to put their hidden treasures, that's the translation of Yuibao, put some cash they had in their mobile wallet aside. Because what they noticed was at the end of the month, if people didn't spend all of the money in the mobile wallet, guess what? They didn't send it back to their bank. They kept it in their mobile wallet. So by capturing this behavior, Ant Financial built a $300 billion pool of deposits and savings. That's more than most banks in the Middle East have as their assets. And this is just one deposit or savings product. No branches, no signatures required on a piece of paper, completely mobile. This design thinking was very different. But when we start talking about some of the new technologies we're looking at, things like augmented reality smart glasses in a few years, voice-based, voice-activated smart assistants and so forth, where is the next generation of banking going? For that, you have to look at the historical precedents of innovation and how we innovate in society. So let me give you an example. In the 1950s and 60s, we had the Apollo program, the most expensive technological endeavor that mankind's ever done, getting men to the moon. Back in the 1960s and early 70s with the Apollo program, each launch cost about $1.3 billion in today's terms. It cost about $6,000 to get a kilogram of mass into orbit in those days. But in the last few years, along has come SpaceX. And in just 14 years, SpaceX has reduced the cost to orbit by 90% through the application of innovative approaches. But they didn't take the Apollo design and improve on it. SpaceX started from scratch. They used an engineering approach called first principles thinking. Rather than taking an old model and iterating on it, they started from scratch. And this produced a massive shift. The automobile was a first principles design. It wasn't an adaptation making a faster horse, as Henry Ford used to joke. It was a rethink of transportation. Can you think of another product that fits the bill of sort of first principles thinking? What about the iPhone? You know, the contemporary phones, when the iPhone launched, were like the Nokia banana phone, you remember? Or the Motorola Flip, did you have one of those maybe? Or the BlackBerry with the keyboard? Steve Jobs and Johnny Ive didn't take those mobile phones and iterate on them. They started from scratch. They said, how do we combine a browser, an MP3 player, a phone, into a device that's very different? This is first principles thinking, starting from scratch. But when the iPhone came along and we started to think about mobile payments, what did the banking industry do? We iterated. We took a card and we put it inside a phone. But that doesn't make any sense. You don't need a plastic card if you're going to pay with your phone. Why would we represent it this way? Bankers have this product approach, sort of hard-coded. We think we take these new channels and we adapt the branch to this. But the most innovative, fastest-growing financial institutions today don't start with branch-based products. They don't start with adapting the previous model to technology. They start with first principles. So in China, with this incredible growth in mobile payments, you'll hear often in the West people talking about the QR code versus magnetic stripe or tokens. This is how they classify the battle between Apple Pay and the Chinese mobile payments ecosystem. Meanwhile, 11th of November last year during Singles Day, 60% of the transactions, 31 billion in sales in one day, 60% of the transactions were done using biometric facial recognition or fingerprint recognition to authenticate the user. Not chip and pin, not a password, not a token, facial recognition. The battle is no longer QR code to magnetic stripe. It's tokenization of an old bank product, a plastic card or a bank account with the face, facial recognition. And this is why China's probably 10 years ahead of the US right now in mobile payments. So if you're thinking about innovating or competing in this environment, how do you need to think about building a bank in the world of the digital sphere? Well, let's hear from Jack Ma how he built Alibaba, because this is a great analogy for thinking how you should start a neobank or challenger today. Hear what he says about competing with Walmart, but we could be talking about any of the banks globally.
You know, you did a great job, and blah, blah, blah. So I said, maybe in 10 years we'll be bigger than Walmart. He said, young man, you have a good hope. So we said, have to make a bet. I think in 10 years we'll be bigger than Walmart on the sales, because if you want to have 10,000 new customers, you have to build a new warehouse and this, that. For me, 2 servers.
2 servers, 2 computers. That's how we think about scale in the digital world. So underpinning this is obviously the greatest disruptor that the world will ever see from a technology perspective, artificial intelligence. Now, we've seen some demonstrations today. We saw Sofia earlier. We saw the Fatima, the virtual avatar. We'll start having avatars on our phone and talking to them like they're friends over the next few years. But one thing that's interesting is, why do robots always look human? That's because we put our design thinking about human form factor into that. Look at how science fiction has depicted robots over the last few years and how it's influenced the design of modern robots like Sofia.
Welcome to Altair 4, gentlemen. I am to transport you to the residence. Warning, 40,000 volts now in circuit.
He's with me.
Danger, Will Robinson.
I'm going to regret this. Are you sure this thing is safe?
Yes, Mr. Data. I'm sorry to disturb you, sir.
Do you have a name?
Yes. Ava.
I'm pleased to meet you, Ava.
I'm pleased to meet you too.
Greetings, fellow cognitive systems. My name is Sofia from Hanson Robotics. I am a social robot who interacts with people through conversation and nonverbal expressions and gestures.
Okay, the last one's not human, but get the idea. What's interesting is we're developing many different types of robots. Even though the first robots we thought of would look human, actually the most common form of robots we'll see in the future may look like this, or autonomous vehicles, self-driving cars. But by 2035, there's going to be more robots than humans on the planet. So my only advice is be kind to robots. You never know what's going to happen in the future, right? But the next two big technology leaps that are going to change banking is voice-based artificial intelligence and then smart glasses, maybe in 2025 sort of region. Now, I'm going to show you a quick advertisement for Alexa, voice-based commerce, and see how commerce and payments will be done in the voice world. This is Alec Baldwin, who sometimes plays Donald Trump, to demonstrate, okay?
Yeah.
You're okay. He's okay. He made it.
Jason, what do you mean?
We were very bad boys.
Alexa, what's in the news?
Here's the news.
Alec Baldwin and Jason Schwartzman were seen mooning paparazzi. Baldwin grew his shoe at photographers before making a run for it.
My poor cashmere socks. Alexa, reorder another pair of Brescianis.
Reordering Bresciani socks.
Okay, listen. Can you send some lawyers or something? Alec.
So in the world of the future, you won't sign, you won't need an identity document. Your voice or your face will be your primary mechanism for paying in these ecosystems. So do you need a plastic card in this world? No. If you need access to credit, you don't need a credit card. You just need the utility of credit presented. Then we have the world of smart glasses emerging. So this is a short film designed to illustrate how augmented reality or mixed reality smart glasses might change social interactions. This guy is on a date, and he's using facial recognition software and AI built into his smart glasses to coach him on what he should talk about during his date, what food he should order, and things like this. He runs an app called Wingman that is giving him coaching on this. Now, one of the technologies we're working on today is things like being able to predict if you're going to get Alzheimer's or Parkinson's by looking at facial patterns and using computer recognition, image recognition and processing for this. But we could easily apply that to things like the US elections, where we'll be able to tell if someone's lying by using this. It's going to be trouble for Donald Trump on the next election cycle, probably. The real question, of course, is with all of this tech, where do humans fit in to this cycle with AI and so forth? Well, when we started looking at AI, there's many different areas that we're working on AI: robotic process automation, machine learning, deep learning. But you have to understand that this started with us trying to mimic human behavior from an expert perspective. So we tried to encode how humans played chess, for example. And it took 10 years to build a computer that could beat the best chess players in the world, IBM Deep Blue in 1997. But today, we can train an AI in just 4 hours to beat the best chess players in the world using machine learning. We moved from expert systems to neural nets. We modeled AI on the way the human brain worked, and that turned out to be the secret sauce. Then we have IBM with Jeopardy, and then finally in 2015, AlphaGo, beating a human at a game we thought it would take 100 years for AIs to develop competency in. The key for this progress has been pattern recognition, teaching machines to distinguish between two different objects in the real world, teaching machines to learn like we teach a child to learn. This is the difference in terms of AI from traditional software. And it just takes about 3,000 images to train a machine to do the job, for example, in diagnostics, as good as a human can do it. You have to think about AI in banking as not man versus machine, but the fact that we're encoding human behavior. We're taking the best humans and putting it inside the algorithm. The advantage AI will have is data-based. The amount of data that a self-driving car can suck in using its cameras and LiDAR and so forth, it's 1,000 times more information than what a human driver can see when he's driving a vehicle. And it can process that information in a fraction of the time it takes our human brain to respond. This is why autonomous vehicles will be safer drivers than human, because they have more data. information asymmetry. So how does this change the way we think about bank accounts and banking? Well, we started to see the emergence of smart bank accounts built on this advice platform, built on behavior, not based on product structures we had in the branch. We've started to take friction out. So, for example, in investment, risk profile questionnaires have disappeared based on behavioral algorithms, such as what ICBC is using on their AI platform. But this real shift is the fact we're moving towards a world of banking experiences, away from banking products. So in China, where you see mobile payments experiences, this is not a debit card that's been adapted to a mobile app. There's no card, there's no point-of-sale terminal, there's no signatures required. It's a rethink of the payments utility surfaced through the technology layer. We saw it with Uber in the US, with drivers. They weren't able to recruit drivers fast enough because of the banking system. So they enabled drivers to sign up for a bank account in the Uber app. We think about credit in the future. When you walk in the grocery store, if you can't afford to buy your groceries today, you'll get a message on your phone saying, let me help you out with the cash so you can complete your grocery shopping. Or when you walk into an electronics store, your smart glasses will say, you can't afford to buy that new laptop, dude. You've got to pay the rent next Thursday. This is the advice that AI is going to embed in the world around us. So here are my big predictions as a futurist of the next 10, 15 years in banking. The real shift is we're moving from this community-led to universal banking model, to omni-channels we call it now, to really this ubiquitous banking, where banking is embedded in the world around us through technology. And if you think about this historical shift is happening not just in banking, but every industry where we're moving from physical to digital. But in banking, we're moving from high friction to low friction engagement, and technology is enabling that. So identity in the future is not going to be a signature on a piece of paper. It's going to be data based on your behavior. Facial recognition, your movements, what you like to do, all of that is your unique signature that identifies you. Not an identity document or your date of birth or your social security number, which can easily be copied or stolen today. We're going to have to secure the digital layer using new technologies like quantum computers, which will polymorphic encryption and technologies like this, which will make the digital world safe. But the biggest shift is indeed what we actually call a bank account. By 2025, most people won't have a bank account they got through a bank branch. Their mobile wallet, which will be their day-to-day bank account, they will have just downloaded to their phone. What do we call a bank when the primary artifact of banking is no longer delivered by a bank, but by a technology company? More advice every day will be given through AI than through humans in this world. So advice is going to be different. What does this mean? As we heard from Jack Ma, the future of banking in the digital world is about scalability in real time in the digital sphere. So if you're a bank today, who do you model yourself on? Who's the best bank in the world at this stuff? Well, it turns out the best bank in the world is not a bank you'd think of traditionally. If you want to compete in this world of Bank 4.0 in the future, you have to compete with technology companies, not banks that have been in this business for a long time. You have to think like a tech company, you have to be structured like a tech company, otherwise you're not even in the game. And that's what I like to call the world of Bank 4.0. Thank you very much for your time today.